Hello my fellow investors and welcome back to another earnings report analysis. Today guys, I would actually like to take a look at the earnings report for Energy Transfer, which we just covered this company, and as well as AMD. I really am curious about AMD guys because this is a really cult-like company and I would like to see if that is founded or not. So with that said, let's get started with the first earnings report for the company Energy Transfers. And of course guys, always remember that I will have all of these earnings reports in the link in the description below. It will be the first links you guys see. So let's actually come over here guys to Seeking Alpha, where we can actually see an article from Energy Transfers pretty much explaining how well they did. And we got here, Energy Transfers GAAP EPS of 29 cents misses by 8 cents, which is interesting. And revenue of $22.94 billion misses by $1.1 billion, guys. That is absolutely insane. However, this is kind of misleading, mainly because of the fact that, well, guys, this is based off of what analysts wanted to see, not necessarily how the company is doing year over year. And in fact, we actually see that right here. Revenue of $22.94 billion is actually an increase of 37.6% year over year, which is really, really good, guys. I mean, imagine having an increase of 37.6% year over year, yet still missing because analysts were predicting even more. So that's, to me, is kind of the reason why I don't like to listen to analysts, because, well, they just have a lot of issues. I mean, they could change their predictions up until like the last hour of earnings, so that's the reason why I don't like it. So let's actually come over here guys and take a look at some of these earnings report, because I want to see the actual statements from the company itself. And so we got here guys, Energy Transfer reported net income attributable to partners for the 3 months ended September 30th, 2022 of $1.01 billion, a $371 million increase from the same period last year. For the 3 months ended in September 30th, 2022, net income per limited partner unit, basic and diluted, was 29 cents per share. Adjusted EBITDA for the 3 months ended September 30th was $3.09 billion compared to $2.58 billion for the 3 months ended September 30th, 2021. In the third quarter of 2022, the partnership experienced a $126 million charge on the crude oil transportation and service segment related to a legal matter. In addition, Energy Transfer's third quarter 2022 results were impacted by an approximately $130 million negative adjustment related to hedge inventory in the NGL and refined products transportation and service segment. These two items impacted third quarter 2022 adjusted EBITDA by approximately $260 million in the aggregate. Distributable cash flow attributable to partners as adjusted for the 3 months ended September 30th, 2022 was $1.58 billion compared to $1.31 billion for the 3 months ended September 30th, 2021. So we have a lot of information here guys. For starters, free cash flow increased pretty decently from $1.31 billion to $1.58 billion. EBITDA also increased, going from $2.58 billion to $3.09 billion, an increase when it comes to their net income as well of $371 million year over year. Now that's all good and dandy. Now let's actually come over here guys to see a couple of the operational things, like essentially like how things were up throughout this past quarter. So we got here, Energy Transfer's nationwide system with diverse products and services is well positioned throughout various markets during the third quarter of 2022. Each of Energy Transfer's 5 core segments realized higher volumes compared with the same period of 2021. Intrastate natural gas transportation volumes were up 28%. Interstate natural gas transportation volumes were up 43%. Midstream's gathered volumes were up 47% and set a new partnership record. Wow, actually 2 of these actually set a new partnership record. NGL transportation volumes were up 5%. NGL fractionation volumes were up 6% and set a new record again, which is crazy. Crude oil transportation and terminal volumes were up 10% and 14% respectively. Energy Transfer's Netherland terminal and related facilities serve as critical resources with access to the U.S. Strategic Petroleum Reserve. Wow guys, that's been in quite the news recently. Higher SPR volumes and increased activity in the region drove transportation and terminal volumes at the Netherlands and Houston terminals to new records during the third quarter. So are they essentially saying there that because Biden has just been releasing oil from the oil reserves, from the U.S. Strategic Petroleum Reserves, that these guys were essentially helping in distributing that oil, like moving that oil from the U.S. Strategic Oil Reserves? So therefore, the U.S. government actually aided in their, I guess, revenues. That's kind of hilarious in my personal opinion. Mainline construction in the Gulf Run pipeline was recently finished, and the project remains on the schedule to be completed by year end. Guys, all of this sounds really, really good, honestly. It really, really does. So there's nothing here that I can see that it is essentially bad. Now, coming over here to the strategic, we get over here over 90% of Energy Transfer's growth capital spending is compromised by projects that are already online or expected to be online, contributing cash flow at very attractive returns before the end of 2023. The project backlog includes Gulf Run Pipeline, Louisiana, Grey Wolf and Bear processing plants in Permian Basin, Fractionator 8 in Mont Belvieu, and LPG facilities projects at Energy Transfer's Netherlands terminal. So as you guys can see, they're not doing too bad, and I'm not gonna go through all of these right now. You guys can read it on your own. Again, this will be linked in the description below so you guys can read it. So now let's actually come over here, guys, to the revenues and some numbers. I actually want to compare this to 2021. We can see that in 2021, guys, they did $16.7 billion. In 2022, guys, they did almost $23 billion in revenue. Operating income also rose massively, going from $1.44 billion to essentially almost $2 billion. Net income going from $907 million to $1.3 billion. And distributable cash flow went from $1.31 billion, as we saw, to $1.58 billion. So overall, guys, you can clearly see they did fairly good, even though they didn't meet analyst estimates. Now, my biggest gripe with this company in yesterday's video, guys, was none other than those shares outstanding. In fact, if you guys haven't seen the shares outstanding, guys, it is absolutely going bonkers. They are issuing shares nonstop at a whopping 886%, actually more than 886% on the 5-year. That is a big issue, guys, because the more shares that they issue, the harder it is for them to not only pay out that dividend, but it's dilution for you. So unfortunately, looking through this article, I could not find any instance where they said that they were going to buy back shares. If you look up share repurchases, nothing comes up. So it's unfortunate, but I don't think that they will buy back shares anytime soon. And guys, that is a major problem when it comes to me buying into this company, because 186%, guys, is not anything small. And this was also something, guys, that was brought to my attention by KLL. He's a commenter and a subscriber here on the channel, and he pretty much brought this up to my attention, which I was not aware of. Now, I don't own any LP companies, so please, if you guys have any information on this, please leave it in the comment section below. And he pretty much just said, since ET is an LP, that means it would also issue a K1 tax form, correct? Have found that these kinds of forms are a bit troublesome. I have talked to some people who have said that they sometimes come in so late they had to file an extension for their taxes. Now, I don't even know what this was, and as soon as I entered over here to try and find, you know, their earnings report, I literally see it right here, K1 tax information. I was not aware of this. This is not something that I know of, because again, I don't have any LP companies. If you guys know anything about it, please leave it in the description below. I will try to do my research on it. I also talked to one of my buddies that owns this company. I'll see if this is an issue for him, but sorry, but as it currently stands, I have no information when it comes to this. Now, the other comment that I would actually like to bring out, guys, is by somebody named Adjudicator, where he pretty much commented on my Energy Transfers LP stock analysis video yesterday. He pretty much just says, it seems like the biggest problem you have with the stock is the dilution. It is, actually it is. However, I could have missed it. There was no account for the millions of dollars of insider buying of the shares. Thoughts? I was actually not aware that there was any insider buyers of millions of dollars. Again, whenever I do, guys, my stock analysis is essentially like a blind thing. I don't usually go into like deep into like the company. I mainly do that deep analysis on my own if I am interested in the company. Usually, guys, my stock analysis is like the basic surface level to see if, like, okay, their fundamentals look good. I think they do have a prospect in the future. Let us continue going on this journey to see if maybe they are a good buy now based on their share price. Let's take a look at what kind of projects they're doing in the future. Do they have any issues like lawsuits coming up, or are they innovating in the certain area that could give them more revenue? That kind of stuff. That's essentially what I do afterwards. And because I wasn't really interested in this company, I wasn't aware of that. However, now that I know that, I will take that into account as well, seeing that there may have been millions of dollars of insider buying of the share. So that's, again, thank you for the comment. I really do appreciate it. And something to definitely take a look at. If you guys also want to take a look at that information by yourselves, you so can. But now, guys, let's actually see if I want to change anything when it comes to my analysis from yesterday. So first of all, when this earnings came out, guys, you can see they did not do so good when it came to analyst expectations. The stock did fall at around like 0.16% throughout the day, and it kind of remained stagnant. Even post-market, it really didn't change. So looking at the 1 year, guys, this is still up 28.4%. Year to date, it is up 46.38%. 52-week range is $7.96 to $12.95. And now coming over here, guys, to my assumptions. Do I really want to change anything when it comes to this? Well, actually, I kind of do. I want to change up the revenues a little bit. Essentially, just want to bump them up by essentially 2. So let's put the lowest assumption, guys, at 10, the median at 12, and the high one at 14, because you can clearly see, guys, they've been doing really good overall. And on top of that, they have been making a lot of projects to hopefully increase the revenue in the future. So that's all good and dandy. However, guys, remember, this is going into the next 4 years. I don't foresee oil being that high, or even natural gas being that high in the next couple years either. Things will eventually come down, but that's the reason why I kind of just wanted to increase this to like 2% more overall, just to see what we would get, because they may actually do a 14% revenue increase in the next 4 years. Now, the one thing I have to keep the same, guys, is the shares outstanding. And in fact, I'm looking at this and I'm like 70%. I think it's low. So yeah, I'm gonna keep it the same as it is, but you can clearly see it's still a lot. Now, with these changes, we do get a target share price of $12.33 to $16.61, not adjusting for debt, and $4 on the dot to $6.77, adjusting for debt. So as it currently stands, guys, we're still in between the low and median assumption. If you guys believe in this company, if you guys understand the whole K1 tax form thing, if you guys know anything about the millions of dollars of insider buying, and you still believe in this company, then you guys might be sitting very pretty when it comes to this. Me personally, honestly, I've kind of just changed my mind. Like with the whole K1 stuff, I don't know, that just took me out of it. I'm just like, I don't want to deal with more taxes, man. It's just way too much for me. I'd rather just buy into another company that is like similar value when it comes to this, that isn't as complicated. But then again, that's just me. But here are the numbers, guys, if you guys want it. And that essentially does it for, guys, the Energy Transfer's earnings report. Now let's actually move into the one that I'm pretty sure a lot of people want to see, and I want to see too, guys, AMD. And now, guys, we're over here at AMD, and oh boy, this one's going to be fun because, well, this company, guys, is a cult-like following. And full disclosure, before I even get started with anything, guys, I love AMD. Like, I really do. Like, I really love their processors. I think the processors are better than Intel's. The laptop I am recording this right now has an AMD Ryzen 5000 series CPU, and I definitely have to attribute this to my best friend, which has been here on the channel. And he's just like, yeah, dude, AMD's products are way better than Intel's. However, guys, this is a case that we have to separate the stock from the company and the products that they make. Just like in Tesla, you can love their products, you can love the company, but their stock price, you might be saying, it's a little bit expensive right now. So let's actually dive into this, guys, into their earnings report. And starting off, guys, we got AMD non-GAAP EPS 67 cents, misses by 3 pennies. Revenue of $5.57 billion, misses by $80 million. But that doesn't necessarily tell us anything. Remember, when it comes to analysts, they could change their estimates up until like the last hour of earnings coming out. And that doesn't really bode well with me, mainly because if they can change their opinions that quickly, guys, I mean, come on, it really is absolutely ridiculous in my personal opinion. So now let's actually delve into these earnings report, guys, because let's compare them to 2021 to see if they're actually that bad. So we're here, guys, AMD's report, third quarter 2022 financial results. Of course, this will be in the link in the description below. So we got here, guys, AMD announces today revenue for the third quarter of 2022 of $5.6 billion, gross margin of 42%, operating loss of $64 million, net income $66 million, and diluted earnings per share of 4 cents. On a non-GAAP basis, gross margin was 50%, operating income was $1.3 billion, net income was $1.1 billion, and diluted earnings per share was 67 cents. And coming down here, guys, to the quarterly financial results, we can see that the revenue grew from 2021 Q3 from $4.3 billion to $5.6 billion. That is up 29% year over year, guys. Gross profits also also increased by 13%, 2.1 billion to 2.4 billion. Gross margin 48% to 42%. That is actually down 610 basis points, or essentially 6%. Operating expenses was up 113%, 1.14 billion to 2.4 billion dollars. Operating income actually came in at a loss of 948 million dollars Q3 of 2021 to negative $64 million in 2022. That was down 107%. Operating margins went from 22% to negative 1%, down 23 basis points. Net income went from 923 to 66, guys. That's down 93%. And earnings per share went from 75 cents to 4 cents. So they kind of mixed. Right, it's kind of mixed over here. The revenues went up great, however, the operating income went down and their net income went down as well. Now, the non-GAAP is kind of similar. Not really going through it, guys, just showing you guys right here. Now, I do want to go over the CEO's statements when it comes to this. We got here, third quarter results came in below our expectations due to the softening PC market and substantial inventory reduction actions across the PC supply chain, said AMD chair and CEO Dr. Lisa Su. Love her, by the way. Despite the challenging macro environment, we grew our revenue 29% year over year, driven by increased sales of our data center embedded in game console products. We are confident that our leadership product portfolio, strong balance sheet, and ongoing growth opportunities in our data centers and embedded businesses position us well to navigate the current market dynamics. So you can see, guys, they are having issues. They really are. Even Intel said that they were having issues, yet they skyrocketed because they beat analyst expectations. In reality, guys, what we have been seeing in the chip manufacturing industry, it's just really tough times. And we're seeing this right now. It's softening PC market and substantial inventory reduction across the PC supply chain. And believe it or not, that actually translated to the stock price going up after market 4.24%, even though they have been down throughout the whole entire trading day 0.67%. That it makes absolutely no sense to me. You guys just saw the numbers. They're not good. And even when it came to like the analysts, they still didn't beat on revenue based on non-GAAP, and they didn't beat on earnings per share either. They came in lower, right? So they still went up 4.24% after market. That to me is just unfounded. Overall, guys, on the 1 year, they're down 52.36%. Year to date, they're down 60.29%. 52-week ranges are $54.57 to $164.46. So this company, guys, is at the all-time lows even today. And now I actually want to come over here to my calculator, guys, because, well, last time I did this company, I got a great comment from somebody saying that AMD will be $200 by next year. Okay, great. I'm going to show you guys exactly as to what my discounted free cash flow actually does, because a lot of people seem to get these kinds of numbers mixed up. I will get to that in just a little bit. Let's go over their overall fundamentals. So we got here AMD, market cap of $96.3 billion, PE of 25, current share price of $59. You guys just saw it post market, they go up by 4%. They do not pay out the dividend, so all their cash flows going straight into themselves. We got, guys, look at this, net income increase of 9,682% on the 5 year, negative 33 million 5 years ago to $3.2 billion. When it comes to the free cash flow, negative $101 million to $3.2 billion, increase of 3,288%, average free cash flow of $808.6 million. Revenue, massive increase as well, not in the thousands, but 212.85% overall, going from $5.25 billion to $16.4 billion. Total assets minus total liabilities, guys, I mean, this graph looks absolutely ridiculous, right? I'm just glad that this value here isn't in the middle one, because then it'll look like it's giving you the finger. But as you guys can clearly see, currently, guys, are the $55.2 billion, and within the past 5 years, they never even broke $10 billion. And then today, 1 year, $55.2 billion, guys. That's an average assets of $17.2 billion, average liabilities of $5 billion. And doing this difference, we get around $12.2 billion. In the cash flow minus the liabilities, this is actually looking really solid, consistently increasing ever since 4 years ago, back down to zero. And currently, as of 1 year ago, they're at negative $1.7 billion. Average cash flow minus the average liabilities is around $2.7 billion. And looking at the shares outstanding, the one that worries me the most, guys, take a look at this. 66.7% share dilution in the 5-year. And what makes it even worse, guys, is take a look at this. On the previous or the current year, they increased it by 33.55%. Guys, in 1 year, from 1 year ago to today, they increased half of their shares outstanding from the 5-year from 1 year ago to today. That to me is absolutely insane. They're diluting you to no end. The share price that I'm going to be coming up with to change drastically. And lastly, when it comes to the cash and equivalents, they currently hold $5 billion with an average of $2.14 billion. And now this is the part that people tend to very heavily disagree with me. In fact, somebody commented in my last video when I did this that the share price was going to be $200 by next year. Yeah, okay, let me explain to you guys why that's not necessarily going to happen. I mean, it could happen, sure, but the values I'm getting here is not what the share price is going to. What I'm getting here, guys, it is essentially the value of the company. Now, before I go on any further, guys, I do have to point out that because of the massive difference when it comes to this company's fundamentals overall, right? You have massive spikes everywhere, especially recently. Discounted free cash flow doesn't necessarily work with the current iteration that you guys have for this. So in cells H9 through K9, as well as all the other ones over here as well. So like U9 to X9, and then from AH9 to AK9, guys, the formula has to be changed to this up here. If you do not change it to that, you will not get the same values that I am getting. So if you want to make that change, you can make that change. If not, then it's fine. But I'm just gonna let you know right now, discounted free cash flow does not work when it comes to a company like this because it is very erratic. Now, with that said, guys, I'm going to make 3 assumptions: low, medium, high. Revenue growths of 10% for the low one, 15% for the median, and 20% for the high one, and a predicted share buyback of -40, -35, and -30%. Guys, the negative just means that they're going to issue shares. Now, you're probably looking at these numbers and you're like, $3.51 for the lowest assumption, not adjusting for debt, and $5.29 for the highest assumption, not adjusting for debt. That's ridiculous. Guys, I understand that, but you have to hear me out. Take a look at this now. Adjusting for debt, it is now $9.13 to $12.89. I am not making a prediction on what the share price is going to be. That is not the point of discounted free cash flow. That's not the point of value investing. The numbers that you're seeing right now, guys, and this applies to every other company I do as well, it is what the value of the company is what I believe the value of the company you should pay for today to get this 10% return in the future based off of these assumptions over here. I'm not saying the share price is going to $10.85. I'm not saying that at all. I'm just saying that this is what the company should be worth. This is what you should pay for a company like this based on what you're getting. Now you're looking at this and you're probably disagreeing with me, and that's fine, guys. Let's actually change these numbers up a bit. We just saw that the revenue growth year over year when it comes to their third quarter is essentially 29%. So you know what, guys, let's entertain this a little bit. Let's come over here and put for the revenue growth below assumption 29%. Let's say for the medium one, let's go up to like 35%. And then for the last one, let's go up to 40%. Guys, the share prices, adjusting for debt, it's now $14.79 to $21.19. What else do you want me to do? I can't make any further assumptions. I could lower these predicted share buybacks, sure. I mean, if we lower it to like, let's say -20, -15, and -10, well, we essentially get, guys, $17, right, to $26. It's still not going to reach the $200 mark that somebody commented in the last video. In fact, if we wanted to reach the $200 mark, guys, we would essentially have to get like 120% on revenue. Actually, not even 120%. It would essentially have to be like 150%, maybe a little bit lower, with a 15% share dilution in the next 4 years, guys. You're telling me that with the rough sector that we have in the industry right now, in the chip industry right now, with the headwinds that we have, you're telling me that they're going to grow at 150% in the next 4 years? I don't believe that. I just do not believe that. So that's essentially why I'm getting the numbers that I am getting, because, well, they essentially, I'm not saying that they don't have great products. I'm just saying that the value that you're getting, it's not $200. It's not $59.69. It should be worth around, $21 to $25, assuming that you believe that they'll grow at 35% to 40% in the next 4 years, even though they do have headwinds right now, guys. So that's essentially my 2 cents when it comes to AMD, guys. Their earnings report was really bad, even though for some reason they're up 4% aftermarket. I don't necessarily know, but that's essentially, guys, my video for earnings report for the companies ET as well as AMD, and of course my thoughts on them both. Always remember, this is not financial advice and every investment is the present value of all future cash flow. Have these calculators, make your own assumption. So remember to like, subscribe, comment. It really does help her with the algorithm on YouTube. So with that said, peace out, and I will see you all in the next stock analysis video as well as earnings report.